Women now hold 32% of senior management roles globally, the highest number ever recorded. But new research also shows that more women are leaving their companies in unprecedented numbers and are switching jobs at the highest rate we've ever seen. What is accounting for this? Well, you'll find out here on The Morning Show. Good morning. It's another power-packed episode of Business Week where you'll get to catch up on all the big business stories. I actually meant to say Business Week, not The Morning Show. But it's Business Week. We're talking business markets. And we're going to be talking about Nigeria's central bank. It's begun clearing FX forward backlogs. I will also be holding a fascinating discussion on women, leadership, and diversity in the corporate world with some special guests. If you couldn't keep up during the week, I'm here to help you catch up. I'm Rolake Akinkunmi-Filoni. Stay tuned. So, as always, we'll start with a summary of the commodities market performance as at Friday, November 3rd. Let's look at this. Brent is down. After rallying very strongly during the week, it ended Friday on a lower bearish note, but not too bad, just 68 basis points. WTI in North America is also down 68 basis points, but natural gas still doing quite well and responding well to demand, up 2.85%. Now, that's a whooping rise from the week before. RBOB gasoline demand also tracking Brent and WTI down by 1.26%. Interesting times there for global commodities. Let's look at what's happening on the Nigeria stock markets now. The NGX All Share Index, well, 22 basis points up as at Friday close of trading to end at 70,196.77 points. Not a bad volume of deals there, 9.16 billion, that's about $11 million. There were some big ticket transactions that happened on Friday. Airtel, GTCO, Fidelity Bank, Flour Mills, I could go on. But the market cap at 38.55 trillion naira. Let's look at Europe. Interestingly with Europe, because ECB, the European Central Bank, held rates constant at its last review of the policy rate. And you can see Euro stocks did respond fairly positively, but not so much FTSE London. FTSE London was down, and a few of the other markets showed quite a mixed picture there. DAX in Germany was up, CAC in Paris was down, but Spain, IBEX 35, quite buoyant at 37 basis points up. What's Wall Street saying? Let's look at the Dow Jones Industrial Index. Well, a positive outlook at the close of business on Friday, 78 basis points up. That was the Dow. The S&P index was up 1.11 and NASDAQ was up 1.38%. So, the favorite part of the show for me, as always, my top picks for the week. Let's start right here in Nigeria. The Senate has approved the government's supplementary 2.17 trillion naira budget. Right now, interestingly, the big winners from this supplementary budget were works and housing, defense, and I think agriculture. The works and housing minister did say there's about 100 billion naira worth of allocation for works and housing to build 2,000 homes across all states, 2,000 homes in each state of Nigeria, actually, starting initially with a 50 billion disbursement for affordable housing and the development of some slums. As we know, infrastructure is quite critical. So good news there for housing. There was some controversy during the week around this presidential yacht. 5 billion worth of presidential yacht purchase and expenditure. Well, time will tell how that pans out. Japan, for the first time in many decades, is introducing a major stimulus package. Now, Japan has done quite well to keep interest rates relatively stable in light of a low inflationary environment. But in recent times, real wages, the last count at July, have been falling in Japan due to rising inflation. Now, that's affecting so many other things. So the government is introducing temporary tax cuts as well as payments and stimulus packages across the economy. 113 billion, that's about 22 trillion Japanese yen, is being introduced there to help steady things in the economy. Didn't quite recover as much as some of the other Asian economies post-COVID, similarly to China, but has quite a buoyant service and tech sector. So good news there for the Japanese economy. China tech IPOs plunge as the Chinese regulator has introduced new stringent regulation that says it's not just enough as a startup to be predicting that you'll be making profit. But you also have to demonstrate how your business model keeps you one step ahead of the competition. Now, these new regulations have meant that 126 Chinese startups have changed their plans on going to the market for IPOs or listings. That's quite a significant regulation that's been introduced there in China, especially because the startup regulation was originally introduced to pour capital into high-risk companies. WeWork is filing for bankruptcy as early as this week. Of course, the flexible working space company has faced a host of issues since 2019, when its CEO, Adam Newman, had to resign months after incurring debt losses, problems around its services. It's now facing and may file Chapter 11 bankruptcy moves next week. Such a shame, because the principle and business model behind WeWork was sound, but COVID and many other things changed the market dynamic. Now it's moving to file for bankruptcy. Interestingly, the company was originally valued at $47 billion when it came to market some years ago. So really sad there to see that. But hey, you have to move with the times. British International Investment, formerly known as CDC, and International DFI, is pledging almost $1 billion in investments in Nigeria. Now, it says that over the next few years, it's going to be investing around $6 billion in Africa as a whole. Nigeria will be getting a huge chunk of that. It's opening a new office in Lagos, led by Benson Adenuga. And during the opening ceremony this past week, it talked about pumping money into the food security and agricultural supply chain, and of course, infrastructure development. So good news there for Nigeria. We need that capital coming. We need the FDI, and we need those flows. We'll be talking a bit more about that later in the program. And now for some other top stories from around the world. FTX founder Sam Bankman-Fried was found guilty on Thursday of stealing from customers of his now bankrupt cryptocurrency exchange in one of the biggest financial frauds on record, a verdict that cemented the 31-year-old former billionaire's fall from grace. A 12-member jury in New York's Manhattan federal court convicted Bankman-Fried on all 7 counts he faced after a month-long trial in which prosecutors made the case that he looted $8 billion from the exchange's users out of sheer greed. The verdict came just shy of 1 year after FTX filed for bankruptcy in a swift corporate meltdown that shocked financial markets and erased his estimated $26 billion personal fortune. Wow, tough. The Central Bank of Nigeria has delivered on some of its outstanding matured forex forwards in some specific banks. On Thursday, people with knowledge of the matter said the CBN had started clearing the backlog and delivered on over 80% of outstanding matured FX forwards in some specific banks. We have been directed to inform you that the CBN has delivered all outstanding matured forward Forex. We thank you for your patience and cooperation and value you for your business and partnership. That's according to Citigroup in a letter to clients. And there were a few other banks, of course, that also received letters from CBN. US President Joe Biden has announced his intention to terminate the participation of Gabon, Niger, Uganda, and the Central African Republic in the Africa Growth and Opportunity Act AGOA trade program. The decision comes in response to what he referred to as serious violations of internationally recognized human rights by the Central African Republic and Uganda. Earlier on, the U.S. government had issued a business advisory to notify U.S. businesses, individuals, and other U.S. entities about business risks under Uganda's recently enacted Anti-Homosexuality Act. Despite intensive engagement between the U.S. and the Central African Republic, Gabon, Niger, and Uganda, these countries have failed to address U.S. concerns about their non-compliance with the AGOA eligibility criteria, President Biden conveyed in a letter to the Speaker of the U.S. House of Representatives. The World Bank has warned that crude prices could rise to more than $150 a barrel if the conflict in the Middle East escalates, risking a repeat of the 1970s oil price shock. In its quarterly commodity markets outlook, the World Bank said a prolonged Israel-Hamas conflict could drive big rises in energy and food prices in what it called a dual shock for commodity markets, still reeling from Russia's full-scale invasion of Ukraine. The world's first global artificial intelligence safety summit wrapped up in the UK with a landmark agreement to test new AI models before they are released. World leaders, including UN Secretary General Antonio Guterres, the European Commission President, and US Vice President Kamala Harris, joined several tech business leaders, including X and Tesla CEO Elon Musk. The summit aimed to start a global conversation on the future regulation of AI. Britain's Prime Minister Rishi Sunak announced that he secured China's backing for an international effort to manage the risks of the technology. Nigeria's Minister for Communications and Digital Economy, Dr. Bosun Tijani, was also in attendance. British energy giant Shell says net profit rose 4.5% to $7 billion in the third quarter from a year earlier as it benefits from high oil prices. Energy majors around the world are benefiting from elevated prices, which are being fueled by concerns the Israel-Hamas conflict could widen across the crude-rich Middle East. Shell also announced a fresh buyback of shares worth $3.5 billion. Good news on the African continent. Rwanda announced on Thursday that it would allow Africans to travel visa-free to the country, becoming the latest nation on the continent, after Kenya, of course, to announce such a measure aimed at boosting free movement of people and trade to rival Europe's Schengen zone. President Paul Kagame made the announcement in the Rwandan capital, Kigali, where he pitched the potential of Africa as a unified tourism destination for a continent that still relies on 60% of its tourists from outside Africa. That's according to data from the United Nations Economic Commission for Africa. That's it for the markets and business update.